All right, let's get right into it. If you're in Nigeria, you know this feeling. The money you put away last month, heck, even last week, it just doesn't buy what it used to, right? That constant wobble of the Naira is probably the biggest single hurdle to building any kind of real wealth.
And this image from one of our sources just says it all. Saving in Naira feels exactly like this. You're pouring water into a basket. You're doing all the right things, you're trying to save, but by the time you actually need that money, a big chunk of it has just leaked away through the cracks of inflation. It's frustrating.
So that brings us to the big question on everyone's mind, not just for today, but for the next few years. It's not just about earning more money. It's about protecting the value of what you've already made. So how do you do it? How do you build a real strategy to protect your cash?
Well, the answer really lies in shifting your mindset to a dollar-based strategy. Now, forget what you might have heard. The old way of thinking was that you needed to be a big man with a briefcase of cash to do this. That's just not true anymore. Today, literally all you need is the smartphone you're probably holding in your hand right now.
So let's get practical. How do you actually do this? We're going to break it down into 3 clear paths. You can think of them like different trails going up the same mountain. Each one is designed for a different type of person, depending on what your goals are and, how comfortable you are with a bit of risk.
Let's kick things off with path number 1. We'll call this one the saver. This path is for you if your main goal is just defense. You've worked hard for your money and you just want to make sure its value is locked in and safe from the Naira's ups and downs. This is all about low-risk protection.
Now, to get what's possible for savers today, we got to quickly define a key term: stablecoins. And look, don't let the word crypto scare you off. It's actually super simple. A stablecoin, like USDT or USDC, is just a digital coin that's tied one-to-one to the US dollar. So, 1 USDT is always meant to be worth $1. Just think of it as a digital dollar you can hold in an app. That's it.
So this table lays out the 3 main choices for a saver. First up, you've got your traditional domiciliary account. Yeah, it's super safe, but look at that return. Pretty much 0. It's really best if you're just receiving money from overseas. Then, in the middle, you have stablecoins. The risk is still low, but the potential return, way higher. You can earn interest on them through something called staking, which is basically like a high-yield savings account for your digital dollars. And finally, you have physical gold, the classic, old-school way to protect yourself against, well, pretty much any kind of economic storm.
All right, so what if you want to do more than just protect your money? What if you want it to actually work for you? That brings us to path number 2, the grower. This is for you if you want your money to generate a steady, passive income in dollars. You want to see that dollar portfolio actually get bigger over time.
And wow, this chart really shows you everything you need to know. Just look at that tiny little sliver for a regular domiciliary account. Now, compare that to the towers representing what you could get from some of these modern digital options. We're talking up to 15%. That right there is the difference between just holding dollars and actively growing them.
So how do you get that kind of growth? Well, here are 2 great options. First, you have digital wealth managers. Think of them as your personal investment team that you can hire for as little as $10. They take your money and invest it for you in things like US stocks and real estate. The second option is dollar mutual funds, where your money gets pooled with others to buy stuff like low-risk bonds. Both are fantastic and super accessible ways to start earning real passive income in dollars. And that brings us to our final path. Path 3 is for the investor. This is for those of you with a bit more appetite for risk, who are aiming for some serious wealth creation, not just slow and steady growth. This is where the rewards can get a lot bigger.
Now, the one thing that has completely unlocked this path for everyone is something called fractional shares. This is a total game changer. See, it used to be that if you wanted to own a piece of a company like Google, you had to buy one full share for, hundreds of dollars. But now, fractional shares mean you can buy just a tiny slice. You can literally own $10 worth of Google or Tesla. It gives anyone on any budget access to the world's biggest companies.
But hey, the investor path isn't just about playing the stock market. For people who want a more tangible asset, you got to look at Nigerian real estate. Especially in some of these high-growth areas, it offers some of the best returns you can find anywhere on Earth.
Okay, get ready for this number. Just let it sink in for a moment. 2,700%. According to our sources, that's roughly the return on land bought in the Ibeju-Lekki area over the past decade. It just goes to show you how buying assets in the direct path of major development can be an absolutely explosive way to build wealth.
And it's not just about waiting for land to appreciate. If you're more focused on cash flow, money in your pocket right now, investing in something like a short-let rental property in prime Lego spots can bring in a gross yield of over 15% a year. That is a powerful income stream, on top of the property's value going up.
Okay, so we've covered the three paths: the saver, the grower, and the investor. Now for the fun part, the actual apps and tools you can use to make it all happen. Let's open up your digital toolkit. So if you're taking the investor path with stocks, Bamboo and Trove are the two heavyweights. The key is picking the one that's right for you. Bamboo has this amazing feature where it pays you 8 to 10% interest on your uninvested US dollars, which is great. Trove, on the other hand, gives you access to more markets, including Chinese stocks, and it has some really strong educational features if you're just starting out.
Now, this next one is huge for all you freelancers and remote workers earning in foreign currency. If your income is mostly in US dollars, Cleva is built just for you, with super low fees. But if you're juggling payments in dollars, pounds, and euros, then Gray's multi-currency accounts are an absolute lifesaver.
Okay, what if you're on the grower path and you're thinking, this sounds great, but I want it to be easy? I get it. For that set it and forget it approach, these are your top two. RiseVest gives you professionally managed portfolios. You just pick your risk level, and their experts do the rest. And PiggyVest's FlexDollar might just be the simplest way to start. It's basically a dollar savings account inside an app you probably already use. It's so straightforward.
Whew! We have covered a ton of ground. We've talked about the why, the what, and the how. So let's bring it all home with the final takeaway and, most importantly, your first step.
But hold on, before you run off and start investing, one crucial piece of advice. As you start making profits from these dollar strategies, you have to remember that those earnings can be taxable. This is why using regulated platforms is so smart, because they give you the statements you need to stay on the right side of things. So be smart about your taxes.
So, what is your very first move? Let's make this dead simple. If you're a beginner, just start with RiseVest or a PiggyVest FlexDollar account. It's the easiest way in. If you're a bit more comfortable with tech, check out USDT on a trusted exchange for those higher interest rates. And for those with more capital to work with, a domiciliary account paired with something stable like Euro bonds, which are just dollar-based bonds, gives you a rock-solid foundation.
And we have to end on this question, because this isn't just some theory. Like we said at the start, every single day you wait, your savings are leaking value. You've got the map, you know the paths, you have the tools. The only real question left is, what is your first dollar move going to be?